Hi, my name is Jay and I make finance videos. So the purpose of today's video is I really wanted to make something that sort of highlighted a lot of the risks that are currently in the cryptocurrency field and that form of investment. If you go online right now and sort of read articles and read news about cryptocurrency, there's a lot of hype around the industry. There's a lot of people that are getting involved, jumping on board, and there's a lot of articles talking about how wonderful it is that cryptocurrency and Bitcoin has reached $12,000. There's a lot of sort of educational pieces that are teaching people how to open up wallets and sort of get involved in cryptocurrencies. And I do not see a lot of people that are highlighting the extreme amount of risk that is currently involved with investing in cryptocurrencies. So that is the purpose of today's video. I really wanted to make something that sort of illustrated the risks and also sort of highlighted the similarities between what is currently happening with cryptocurrency, with a very historical market crash that happened in 2001, and sort of showing how eerily similar the two events currently are, and hopefully helping some people out who maybe are considering getting involved in cryptocurrencies that really don't necessarily understand how much risk is involved with buying cryptocurrencies right now. So that is more or less going to be the purpose of this video. Before jumping into that, I want to get started in talking a little bit about one of the issues that is really complicating the cryptocurrency issue, and that is that it's currently a very polarizing subject. And this is something that sort of has resulted a lot because of the political sort of situations going on in the world with Trump right now. What's happening is you have one side that has sort of an extreme view to the left, and then one side that has an extreme view to the right. And there really isn't any in-between between these two viewpoints, and that's a very dangerous and a very unfortunate situation that is happening currently with cryptocurrencies. And sort of the two extremes of that situation, you have on one side the individuals that look at cryptocurrencies and look at Bitcoin and other sort of systems like it, and they say, oh, it's a fraud. It's not a real investment. It's a joke, and it's not going to last. And that is sort of one camp. And the unfortunate reality is those people are wrong. It is not a fraud. The underlying tech of Bitcoin is legitimate, and sort of the technology is 100% going to be a part of finance moving forward. But sort of that's their viewpoint. And then on the other side of the equation, you have the people that are very passionate about Bitcoin, that see that Bitcoin and other cryptocurrencies are the future and they are going to be the dominant currencies in the future, and they're sort of piling on that. And so it's almost like a cult at this point with how sort of fervently they believe in what it's going to be. And the unfortunate reality, these are really the sort of the two sides, and anyone with a differing opinion or someone who's in the middle, they're kind of getting drowned out by the two competing ideologies that are sort of being proposed. Or not necessarily ideologies, but ideas that these people are proposing. And I'm trying to make sort of a video that's objectively looking at both sides and considering the ideas of both sides, because as an individual, I'm not an expert, so I don't necessarily understand the intricacies of blockchain and the technology underlying Bitcoin, but I know enough about technology, being sort of someone who's been working on computer science and programming for a period of time now. I can look at it and understand that cryptocurrencies and the technology specifically underlying cryptocurrencies is going to be an integral part of finance within the next 10 years, an integral part of every aspect of finance. It is such a sort of an advancement in efficiency and the potential that it has, it is going to revolutionize the finance industry. And so that's sort of the technology side. So I can look at Bitcoin and look at these cryptocurrencies and say, yes, there is a revolutionary technology piece there. But I can also look at the finance side and say, well, is Bitcoin, is Ethereum, are these current cryptocurrencies going to be what's going to be that driving force behind that revolution? Or is it going to be the technology is going to be taken from those and applied to the pre-existing systems? And I feel like I have a more objective opinion on this than most, because I can look at it from the finance side, and I can also look at it from the technology side, and I have a good enough understanding on both that I feel that I have a sort of an advantage over most people talking about this in the industry right now. And so I just wanted to highlight that's a pretty major issue with cryptocurrencies right now, that you have very polarized sides, and what I'm trying to do today is make sort of an objective look at where cryptocurrencies are going, what potential it has, and sort of what climate this sort of hype around cryptocurrencies had created. And the main highlight of this video I want to make today is comparing what's going on with cryptocurrencies with what happened in 2001. So 2001, if you're unfamiliar, was one of the worst market crashes in recent history that has happened. And it was almost all centered around the technology industry, and specifically centered around what were called dot-com stocks. And so effectively what happened was, this was a time where the internet was really first starting to take off. It was really expanding. People were looking at the internet and saying, well, this is the future. And people understood the amazing potential that the internet had. And what was happening was there were these companies that were sort of business plans were being made around, say, a specific domain name that someone acquired, like, just as an example, like a shop.com. And a business plan was made, and they had some people, and they had an idea of where they wanted to go. And what was happening was, these ideas, they weren't really companies yet. They were sort of basic ideas with basic business plans, with sort of rudimentary sort of startings of a company, were getting listed on the stock exchange. And they were getting traded like legitimate companies. And what was happening was that people saw the potential of what the internet could become, and the potential of what these internet-related businesses could achieve, and they were throwing money at them. And so the first issue there was that it was a largely unregulated, or there were fairly lax regulations on who could offer, or what companies could be put on the stock exchange. Who could have an IPO, an initial sort of company launch. And what was happening was, these companies that really were not legitimate and really shouldn't have been listed on the stock exchange were. And they were getting tremendous amounts of money from these people that were sort of prospecting, speculating on the future. And all of this hype started to flow in on this industry. People started to go, well, I mean, there's so much money being made. These companies are being offered, these dot-com companies, and their stock would double overnight. And it would rise crazy amounts. And people just sort of started, almost a hype, a frenzy of buying sort of erupted around these dot-com stocks. And there are some crazy stories from that period of time. So just as an example, one of those stories, so when you purchase a stock, there's something called a stock ticker. And that is sort of the small identifier, unique identifier used to choose what stock you want to purchase or sell. So a company might have a long name, but its stock ticker is typically going to be 3 letters, so it might be GRE, and that sort of is the identifier for that stock. Well, what happened was, there was a company that was completely unrelated to this internet craze that was happening, a legitimate business that was not related to the dot-com stocks. They had a specific stock ticker. And one of these new internet companies was introduced. They were launched onto the stock exchange, and they had a similar stock ticket. And what happened was, there was such a craze, there was such a hype around that, as people desperately tried to get a hold of that stock before it skyrocketed. They were inputting the wrong stock ticker symbol, and they were buying the completely unrelated company because there was such a craze, such a drive to get there first before everybody else. And for a number of days, this completely unrelated stock skyrocketed in prices because people were buying the wrong thing. And stories like that from that time period are not uncommon at all. There was a lot of craze, there was a lot of insanity almost with what was happening there. And eventually what it led to is all of this money is influxing into these businesses that really do not deserve it. They don't have the value to justify those valuations. They don't have the income or anything like that to justify the amount of money that they were getting. And eventually what happened was, when it came out, when they released sort of their income statements for what was going on, the financial side of it, people sort of stopped and were like, whoa, these companies aren't making money, that's weird. We've thrown tons and tons of money at them, what's going on? And then they realized, oh, these companies were not legitimate, or not necessarily not legitimate, but they weren't justifiable at the valuations they were getting. And people all of a sudden realized they had thrown a lot of money at companies that did not deserve that money. They started pulling out. and it was a mass pullout, and it led to a huge crash in the market, specifically in the stock market, but in the tech side of the stock market, but it led to everything. And ultimately, it led to a 78% loss in the market because of that, because of all this hype that was surrounding this industry, this new innovative area where people were just throwing money at it with really no justification or reasonable justification, and it led to this massive fall off. Now, so what were the key things there? The initial products being offered, there was very little regulation around them, so pretty much anybody with a business plan, a domain, and sort of very basic things were able to list on the stock exchange, and they really shouldn't have been able to do so. There was a tremendous amount of hype around the industry. People were regarding it as the future, as the sort of dawn of a new age, and so there was a lot of hype around it. A third thing, there was a lot of speculation where people were throwing money at sort of these various companies that were way overvalued. Their underlying value did not justify the amount of money they were getting and the price tag that they had on their stock. And that ultimately led to that crash. Now take a step back and look at what is currently going on in the world with cryptocurrencies. Do you see similarities? You probably should. If you look at the cryptocurrency world right now in what's called ICOs, initial coin offerings, very similar to what happened in the dotcom crash, they're almost entirely unregulated. That's one of the benefits that people sort of spout around these cryptocurrencies is they are not regulated by the government. The government doesn't have control over them, so people are like, great, this is an awesome thing. And it's an unfortunate reality with what's going on in the world right now, with what's sort of happened with Trump and some other administrations in the world. They've made some pretty big mistakes, and ultimately that's led to people having a pretty negative view of government and what they do. But the reality of the matter is that the government, and specifically a lot of agencies that are government related that deal with regulation, that deal with consumer protection and things along those lines, are incredibly important. And they do incredibly important things to ensure market stability, to ensure the legitimacy of things entering the market, and to ensure that everything just works properly. And currently there is nobody regulating these ICOs, or there is little to no regulation on these. So you can just create a cryptocurrency and list it, and people are going to start throwing money at you. Does that sound familiar to something else that happened? In 2001, yes. These new companies that people see as the future are just getting insane amounts of funding right off the bat because people are desperately trying to get in before they skyrocket in price. Now you may look at something like the 2001 and say, well, it did actually turn out to be the future. The internet did turn into what people thought it would be. And so realistically, that was an appropriate assessment of the situation. The key thing to note is people thought that these dot-com stocks were the future of the internet. The internet did become this beautiful, amazing, wonderful thing, wonderful place of information and sort of businesses and things like that. But the initial idea that people thought it would become, that was not the reality. People thought these various dot-com stocks that sort of were created were going to be the future of the internet. They didn't turn out to be. The internet became something amazing, but it wasn't what people initially thought it would become. That is a very similar thing to potentially what's happening in the cryptocurrency world right now. People think that Bitcoin, Ethereum, and these other cryptocurrencies are the future. And so they're throwing money at it because they want to get in early. The question is, are they really the future, or are they the first iteration of something that blockchain will become? And that is a very valid question that doesn't necessarily have an easy answer. Potentially, Bitcoin and Ethereum are the future of currency. But me, and personally, and this is my opinion, and you will definitely find people with differing opinions, objectively looking at it, it's much more probable that the underlying tech of Bitcoin and of Ethereum will be taken and integrated into pre-existing systems. I personally do not think these current cryptocurrencies are the future. I think their tech is the future, but they themselves will not be the dominant currencies. Again, that is my opinion, and you will find differing opinions. So that is sort of another thing where people sort of view these new cryptocurrencies as the future, but they're not necessarily guaranteed. And sort of the third parallel that is very important is these massive, between 2001 and the current cryptocurrency market, is there's a lot of money being thrown at things that don't necessarily have the value to justify it. That is a very important statement that I think I've talked about this previously in another video talking about cryptocurrencies and their underlying value. I'm going to highlight it again because this is so incredibly important to understand when you're investing in cryptocurrencies, that they actually don't have any underlying value, or basically none. Now what does that mean? Because you might look at, say, Bitcoin right now and say, well, it's worth $12,000. It definitely has value. And you know, if this is like 2 weeks you're watching after this video is up, it might be $14,000. I'm talking specifically about its intrinsic underlying value, not its dollar or price tag. What value does it have beyond that price tag? And I'm going to use a couple of different examples to sort of illustrate what I'm trying to talk about. When you look at a stock, and let's choose a company like Amazon. So Amazon has a stock that's worth around $1,000 right now, in sort of that price range. Well, investors can hype up that stock. So if a lot of people suddenly start buying Amazon stock, that will push it up to, say, $1,500. And that may be an overvaluation of what the company is. But the reality of the matter is the stock and the company itself, Amazon still has underlying value that supports that stock. So they have intellectual property. They have manufacturing plants, or they have distribution centers rather. They have branding. They have inventory. They have all of these things that sort of provide and support the value of their stock. Now, their stock can get overvalued, but they still have underlying value that supports that. That's very important. And hopefully that is understandable. Now, you may look at something, say, like the US dollar and say, well, that doesn't actually have any value. How is that any different than a cryptocurrency? Well, it does actually. It just doesn't have a physical value. The value of something like the US dollar is the guarantee of the government and the government organization in the US Treasury that backs it. And that is a very significant value, because that is a massive government organization that effectively guarantees the value of that money. Now, you could make the argument that if the US Treasury and the US government were to fall, if they were to collapse, well, the value of the US dollar would also collapse and be worthless. And that is a fair assessment. But the reality of the matter is, if the US government ever were to fall, the rest of the world is probably falling as well. And at that point, you most likely won't care about the value of the dollar. And so the fact that there is this massive government organization that backs that US dollar means it has underlying value. Now let's look at the third option. What does Bitcoin, what does Ethereum, what do any of these cryptocurrencies have as underlying value? There's only two things that arguments that I can see that people can make. The first one is the technology side. Okay, so the blockchain, the technology that makes these cryptocurrencies unique, well, that has value, doesn't it? Sure it does. But here's the issue. If that is the value that makes up Bitcoin, what happens when a company takes that blockchain and integrates it into their system? What happens when a government like the United States takes the blockchain and integrates it into their currency? Does Bitcoin lose all of its value? If that's the only thing that justifies its price tag, what happens when blockchain is integrated into everything else? Because you already see that happening. Interact, one of the sort of major players in financial transactions, is incorporating blockchain into their transactions. What happens when everybody does that? Does Bitcoin just lose? Because if that's the only thing justifying its value, what happens when everybody has blockchain in it? And that is probably going to be a reality over the next 10 to 15 years in the financial field. And the only sort of second thing that I can see people justify as a value for Bitcoin is, well, it stores money. It has a value that you can then exchange it for in the US dollar. But the reality of the matter is, a ton of things do that. Gold does that. US dollar does that. Every currency does that. There is nothing that really justifies the value of Bitcoin, the underlying value of Bitcoin, for the price tag that it's selling at right now. And that's a massive issue. And what that effectively means is, and might get a bit confusing for some people because I'm saying it has no value, but then you can go and look at the price tag and say it has a $14,000 value and that you can exchange it for that. The only thing that justifies that value is that somebody else is willing to pay you $14,000 for that. There's nothing that backs that. There's nothing that supports that value. It's just a hope and a dream that some other person is going to pay you money for that Bitcoin when you try and sell it. Nothing justifies it. Nothing. And that's terrifying, because what happens when people decide to stop buying it? The only reason Bitcoin is at this value is because there's tons of hype around it. What if that hype disappears? What if people stop believing in Bitcoin? Or not even just that, what if people stop buying Bitcoin? What if they go to a different cryptocurrency? Well, the price of Bitcoin collapses because the only thing supporting it right now is investor demand, investor hype. And that is very dangerous. And so if you're considering investing in Bitcoin right now, be very cautious, or any cryptocurrency, because, and you don't even have to take my opinion for it, there's a lot of people that are sort of talking about different cryptocurrencies right now that are putting a lot of bullshit out there, to be quite honest. And it's really important to be objective and to seriously sort of consider and fact check people. And fact check me, fact check everybody who's talking about this subject. And you can do that fairly easily. Go and read up about 2001. There's a lot of information about it. It was a very bad crash. And just go look what happened. Look what started it, look what happened as it was sort of the hype and the craze really took off, and look how it ended. And objectively take a step back and look what is happening in the cryptocurrency world right now. And you will see massive parallels, and I mean very significant parallels between the two situations. And sort of the definition of insanity is doing the same thing twice and expecting different results. Well, if there are very strong parallels between the two, what do you think is going to happen in 4, 5, 6 months as this hype continues to go on? Probably nothing good. And that is a very important thing to say that I just said, probably. There are no guarantees in finance. Right now, objectively looking from my perspective, this does not look like it's going to end well. That doesn't necessarily mean it's going to crash, but I think that's probably the most probable outcome right now in the current framework. That doesn't, again, necessarily mean it's a guarantee. And a perfect example, actually, that I'll use, that I personally talked about. When I first started the channel, one of my first videos that I talked about was, is the housing market about to crash again? And the purpose of this video, I was highlighting what was happening in the Toronto housing market, which is a major city in Canada. And at the time, the housing market was kind of out of control. There were a lot of people that were throwing money into the housing market. There was a lot of foreign investment, and prices were rising significantly, fairly fast. And it was rising at a rate that was sort of leading to what potentially could have been a crash. And sort of the whole purpose of the video I made was saying, if this continues, there's a good chance it's going to crash. And it didn't. And the reason it didn't is because the government threw regulations at that housing market. They threw regulations that restricted foreign investment. They tightened up mortgage regulations, and they got it under control. They stopped sort of the massive rise, they cooled off the market, and they managed to stop it from getting to a point where it was likely to crash. They did what they needed to do to fix the problem. And that was a situation that did not look good at the time, but they managed to get it under control. And that's really important to understand. At the time, it was not looking good, but they fixed it, more or less, or at least they got it under control. But the issue is, when you look at Bitcoin right now, and cryptocurrencies right now, there's nobody trying to stop this. There's nobody trying, and when I mean stop this, there's nobody trying to curtail the hype. There's no one trying to get it under control. I don't mean get rid of cryptocurrencies. I mean just stop the madness of and insanity of people just throwing money at these cryptocurrencies willy-nilly. There's no regulation. There's no government agency trying to ensure stability in the market. There's no government agency trying to ensure that this doesn't result in a massive crash. In fact, there's almost the complete opposite, where there are people trying to continuously hype this up even more because it means they make more money. And again, this is my opinion, but looking at this objectively, it's not going to end well. Take a step back. Obviously, when you look at, say, Bitcoin appreciating 20% in a day, that looks pretty fantastic. You can make a lot of money really quick, but it's important to understand that if you do decide to go and invest in a cryptocurrency right now, you are investing in probably what is the most risky investment in the market right now. You are investing in something that has the potential to fall off the face of the earth valuation-wise. And a lot of people, when they're talking about investing, like to throw out the statement, don't invest something that you aren't willing to lose. And when you're investing in, say, like the stock market and a mutual fund, well, that kind of has some merit. It's potential the entire stock market could just fall off the face of the earth and everything sort of goes to shit. But it's very unlikely that that happens. And realistically, you could lose a lot of money, but you're probably not going to lose everything. When it comes to cryptocurrencies, you can legitimately lose everything right now. And that's not a far-fetched reality. That's a pretty serious consideration at this point in time. And historically, looking at what happened in 2001, very much looks like it's happening again in 2018. That's sort of why I have this title here. I would not be surprised at all if cryptocurrencies were to completely collapse in 2018 with the rate that they're going at right now. Is it possible they get under control? Yes. Is it possible that the problems that currently face cryptocurrencies get fixed? Yes. But nobody's trying to do it right now. Nobody's trying to get it under control. Nobody is trying to regulate it. Nobody is trying to ensure the stability of those markets. And as such, it's continuously getting out of hand. And really, the main reason I wanted to make this video is because this isn't going to change the mind of someone who's really passionate about these cryptocurrencies. It's not going to get them to not invest and not hype up these cryptocurrencies. The purpose of this video is to hopefully sort of educate people who don't necessarily know a lot about investing, don't necessarily know a lot about what's going on, who are looking at cryptocurrencies and saying, hey, I want to make money too, and are considering getting involved in it. This video is sort of to be a serious warning to those individuals. You need to do some research before you start investing in cryptocurrencies, because right now it is incredibly risky. And so if you have friends, if you have family, if you have coworkers who are considering cryptocurrencies as an investment, I would highly recommend you show them this video, or at least tell them to look at what happened in 2001, and then look objectively at what is happening right now. The parallels are very apparent, and it is incredibly risky right now. So if you're considering cryptocurrencies, please be very cautious and understand truly that you actually can lose everything like that right now. And that is a very real possibility. Hopefully this video has sort of helped you understand a lot of the risks that's going on with cryptocurrencies right now, and hopefully it is a tale of caution for people who are considering getting involved in that. As always, if you like the video, very much appreciate a like, share, and subscribe. It helps the channel grow, and have a great day.